One. Good afternoon, everybody, and thank you for joining this webinar. My name is Michael Murray. I'm partner and environmental lead at the Blended Capital Group. Today, we're here to discuss financial access to the artisanal mining sector and how an innovative approach around a digital marketplace is opening doors. So we're going to dive into that conversation quickly, but first, let's just have a quick introduction around the table. Rob, over to you.
I'm really looking forward to this conversation. My name is Rob Kirkpatrick. I'm the mining partner at the Blended Capital Group. My focus is around artisanal mining and how do you change outcomes in the sector? Because it's massive. There are 45 million miners. The opportunities around social value, environmental value, as well as financial value are simply massive if we think about formalization in a holistic way.
Great, thanks, Rob. Over to you, Luke.
Hi, good morning. My name is Luc Lapointe from Capitals Hub Canada, also Capitals Coalition, part of the Secretariat for the Americas, Latin America, and the Caribbean. And our work focuses on evaluating non-financial capitals. We think it's very important for the mining sector, and the discussion today will focus on both, right? How do we drive more financial capital towards ASM mining? How do we increase transparency, and how do we value nature, biodiversity, and these other capitals that are important as well now, even more in this era of sustainability? So good morning, and looking forward to the chat.
Fantastic, thanks, Luke. Marcin, over to you.
Yeah, thank you. Good morning, everyone. My name is Marcin Piersiak, and I'm a director for Europe of Alliance for Responsible Mining. We're an NGO based out of Colombia and working globally, supporting, promoting the artisanal and small-scale mining sector as a viable opportunity for better income for a lot of people around the world, as Rob said. What we do, we set standards for responsible artisanal and small-scale mining. We support miners directly to implement them, to improve their practices, and also try to facilitate connections between the miners and different stakeholders, including the market players and investors.
Fantastic, thanks, Marcin. All right, so let's jump into the questions. I guess the first important question would be around what is the digital marketplace and how will it help to democratize access to capital? So I guess we can start with you, Luke, and then over to Rob and then to Marcin.
Thank you, Michael, for the question. And I think just sometimes it's hard to understand the change that's happening in the financial system, right? We went from paper to electronic, and now we're going towards a digital era. So the banking system is changing, but it's not changing equally around the world. And the only reason that it's changing is that over the past decades or couple of decades, we have focused on infrastructure. So having banks and financial institutions that have rigid process to get the funding, and quite often not as transparent as it should be, right? So over the past, I would say less than 5 or 6 years, the world of digital tokenization, right, which is known also as crypto, has also looked at the same digital assets, but on the regulated side. So the marketplace is looking at how do we transfer money, how do we make money available, how do we create new asset class, right? That's hard to invest in mining. It's often complicated, it's complex, it's got various components that are moving. Sometimes it's hard to find them or actually get the money where it's most needed as part of a project, right? The digital marketplace helps pull some of these smaller projects that would be hard to finance today into funds that would be easily accessible to investors looking for investment in the critical mineral race that all countries are facing right now. So the digital marketplace at the end is providing the sector, the mining sector, a one place for investors to find deals, for projects to find investment, and also for communities to address the concern that they have around mining projects, right? So biodiversity and nature and community engagement. So the marketplace is not the panacea to all the need that the mining sector has, but it provides a place where you can get funding and where you can actually engage local communities as well in the funding of some of these projects. So this is a brief introduction, and hopefully we'll dive into more details and as we go through this chat.
Great, thanks. Over to you, Rob.
Thank you. So building off what Luke said, the keywords that come to my mind are transparency, trust, ease of use. That's what a digital marketplace is all about. It's an online environment that connects miners with investors in a transparent way. So projects are understood, and there's the trust that what investors think they're seeing is what they're actually seeing and what's actually happening on the ground. So what does all of that mean? Any given project, any given artisanal mining site has a certain profile with social and environmental impacts that range anything from its productivity through its impact on reforestation or deforestation to its human rights adherence and so on through a myriad set of characteristics. So there are going to be asset classes that talk to the various social, environmental, and economic and financial impacts that ASM brings. Those asset classes are going to reflect the reality on the ground, and miners based on their individual characteristics, investors based on their individual characteristics will be able to target projects that make sense based on what they care about, because some care more about social, some are more the pure financial side. So what we end up with is an environment that's easy and transparent, because investors can pick and choose, investors can see what's happening in the ground, and from a miner point of view, there's the opportunity to engage investors in a non-predatory way, in legitimate, equitable investors towards the opportunities that are on the table through formalization.
Yeah, and as you mentioned, obviously that trust is totally reciprocal between the community and the investors, so and that will build over time. So I think that's fantastic. Marcin, over to you.
Yeah, so I think, I would say that facilitation, so a marketplace, obviously is a place where people meet to do transactions. And I think this is normally a bit difficult given the nature of artisanal mining that is, often informal or semi-formal, that is often distributed quite widely, across geographies and also minerals. So I think it's an opportunity to kind of, bring a bit more efficiency into matching those miners who are interested in receiving financing and potential investors. And I think also, again, because we're dealing with a lot of rather small players, ASM has often been, kind of in this gap. They're too big for microfinance sometimes, but also too small for large kind of institutional investors. Banks, traditional banks are not very open to lending to miners. The processes, are not adapted to this kind of client. So I think also having a process, something that does this pre-vetting against standards such as the sustainability standards, the craft code or per mind that our organization has developed, gives a sense of trust and bridges this first important gap, to really connect people and get everyone on the same page.
Yeah, fantastic. Okay, well then let's move on to, I think it would be good to understand what are the deliverables? What is artisanal mining professionalization delivering to obviously investors and communities alike? I think we can start with Rob, and then we can go to Marcin and then to Luke.
Thanks, Michael. So Marcin's obviously the core expert here, but to me, stable, predictable, equitable business relationships are what we're talking about. So enabling the governance and capacity planning that positions miners to improve their productivity, to improve the dignity of work, to improve the nature positive outcomes of the sector, or towards nature positive outcomes, and to improve the social outcomes of the sector. So by enabling governance that makes sense, led by the folks on the ground, for the folks on the ground, by the folks on the ground, it essentially allows miners to stand up relative to predatory actors, but also do the work needed to transition to good mining practices, to transition to safer mining practices, to transition towards more environmentally responsible mining practices. So Marcin talked about forest smart mining, for instance, which the Alliance for Responsible Mining enabled and sponsored. And it's really about changing what operations look like. So when done properly, the key point is everyone ends up winning. It's about sustainable business practices where everyone ends up winning. Good for the miner, good for the community, while also lowering downstream value chain risk because responsibility and predictability are in play.
Yeah, absolutely. Marcin, over to you for the more granular.
Yeah, I think, it also really is for the miners, especially a lot of them, they kind of, start mining just either by accident or maybe their parents were doing mining, but maybe haven't received, formal education related to technical aspects and so on. And they actually normally, very good, they have a great intuition, but they want to improve, they want to optimize the processes, and really kind of transition towards being, responsible and productive small enterprises, right? They're very entrepreneurial people. So this is on the one hand, and obviously that brings not only improved productivity, but also, as avoiding accidents and actually, engaging with the community also around the environmental protection and kind of really bringing benefits to the wider ecosystem around mining. What I think is interesting here to say is also that it's strongly linked also to the necessities that the investors would normally have. So a lot of the professionalization also actually has to do with defining internal governance structures. How are we going to organize? Who's responsible for what? Who's doing the accounting? What kind of documentation we are creating? How are we going about traceability? Are we able to develop a basic business plan so that you can actually tell the investors what are your expectations, what is their return on investment, and so on and so on. And all of this can be done in a simple way, kind of adapted to these small local businesses, but that there is this again bridging this gap between the expectations of people who would like to invest in the sector and are expecting these contributions to sustainable outcomes. As we said, there is a great potential to contribute to the sustainable development goals, social, environmental, economic, but also from this very pragmatic perspective of how sure can I be that these guys are actually going to be managing my investment in such a way that it turns good, that it really reaches its objectives, and hopefully that I can recover my investment.
Yeah. That's great. Thank you, Marcin. I think, Luke, we've heard sort of around from the mining perspective, the deliverables and the benefits, and a little bit about the attractiveness to investors. Perhaps you can just give a little bit of insight around the deliverables and the benefits for the investors per se that might not have been covered.
Yeah, no, I think that there are many very different components that need to take place at the same time. Today, all of this is human capital intensive. So everything that we're talking about is done by people making calls and going on the sites and and having to trust everybody. And I think Rob, mentioned time, trust, transparency as the three T's for us that are the most important. Timing is important, trust and transparency in a transaction. I know sometimes it's hard to understand, but we're about to face what we call the regulatory tsunami. So many legislations are coming into place from Europe, from the US, from Canada, from all over the world that investor will need to report on, right? So for example, ARM may have a process to formalize, which is fine, and the craft and all these other processes that explain. But now you need to report under the Colombian green taxonomy. If the money comes from Europe, you need to report on the European green taxonomy. And if it comes from other jurisdiction, you need to report on these other jurisdictions. There's also the whole question about information asymmetry, right? So the investors is in some other places where the mining is not taking place, and you need to trust the local partners of the information that he's giving you. So again, if you're working from this paper base, well, I can write something and erase it within a few seconds, right? And change a number in an Excel spreadsheet, and you get a different sense that things might be going well, right? In this case, by using blockchain, which is not the panacea, but it brings that trust, right? It brings that transparency for investors. It also brings that transparency for local communities. What's happening at the local level? What are we investing in, right? And how do we, at the end of the day, I think the most important is how do we nationalize money? Look at Colombia, which is a fairly developed country for in emerging economies. And today, if somebody wants to invest here to nationalize money, I mean, it is painful and it is costly and it is lengthy, right? Because of the process. And we're not skipping the process. I mean, this will allow investors to get a sense of what's happening, to track what's happening, to make sure that their KPIs are being met, right? That I'm actually meeting what I need to report back to the capital market regulators, who are the one behind the investors, right? If you don't comply, you'll be fined. I mean, quite quickly, right? So again, I think this is the process that ARM has and all of these processes that exist right now are important, but they need to be also take place in the context of all of these regulations that are taking place this year that will ask for more transparency, more information. And we know that, I think it was yesterday or the day before that we saw that most of the financing that used to be done by bank for the mining sector now is done by private credit. And we need to develop these relationships, and we need to speak the same language, not the same as when we used to have banks. But so again, we can go on forever on this topic. But I think it's as a friend used to say, it's going from the landline era of the phone and going towards smartphone. Right? We could have continued with the plan that we're going to put posts around the world and eventually get to the deepest part of the world. Right? So now this technology allows you to actually make transactions rapidly, right, within seconds, to give transparency. So again, I can go on forever, but this is, at the end of the day, is providing access to capital, democratizing access to capital, right, and changing the models in which, as I said, as we speak right now, there's $191 billion being traded on Coinbase, right, on a daily basis in cryptos, and people are looking for assets to park this money, right? So again, it's making it available, going into this new era of technology. And so again, I can go on forever, but I'll stop there. I'll let you come back.
Okay, great.
Maybe if I can just add something, because I think,
yes.
well, we haven't mentioned that actually it's not like that these miners do not have investment. They do, but it's outside the let's call it, official system, and they pay a very heavy price for it. So normally, the kind of unofficial lenders, obviously the rates are very, very high. Actually, even with official borrowing, miners can pay up to like 40% in the annually, and really talking about unofficial lenders, even like 10% per month. So I think there is a huge opportunity here to still have a decent return on your investment while really facilitating access to capital that can allow this productivity boost and a better return on investment, and actually maybe encourage these miners who are very risk averse because money costs them so much to invest in new technologies, more environmentally friendly technologies, and really again progress and produce more.
Yeah, I mean, easier said than done, but removal of these bad actors is a benefit for everybody. It's win-win all around. Have something to add there? Rob?
Yeah, please. One of the interesting things listening to Marcin and Luc and bringing the two things together, Marcin talked about predatory lenders and high rates, and we're talking about equitable finance, non-predatory. So that transition, Luke used the phrase common language, or I forget his exact words, but we've got miners on the ground, and miners speak one language. We've got socioeconomic experts, engagement experts, people who work the process of formalization. It's a different language. And then we have investors, and that's a very different third language. And even within investors, there's multiple categories, because a impact investor talks, looks, and thinks differently from pure traditional value-based investor. So creating a Rosetta Stone where there's common language and the ability to interact transparently, where different groups know what each other are talking about, is one of the fundamental values that a digital marketplace brings, because there is a common Rosetta Stone, and it's called the asset classes, and it's called the information flow that goes through the asset classes through the secure reality of blockchain.
Yeah, thanks for that, Rob. I see Lucas raised his hand.
Yes, if you don't mind to add, we can probably go on forever to make this a very, very interactive conversation. But again, looking at just the technology side, right? We're looking what's happening with Gates Foundation right now in Zambia with Go Bold or Kobold. So that technology will be made available to big mining projects, but this will never get there. How long will it take before this gets to ASM projects? Maybe never, right? or maybe eventually, but this brings in opportunities, right? To actually leverage the massive amount of people that are working in the ASM sectors, right? Bring them all together and collect that data for the benefit of the ASM sector, not for the benefit of other individuals, right? So again, these technologies would be extremely expensive on their own, would be hard to drive to get them, and just the knowledge gap that you would need to close to make that technology available, right? Actually start looking at the data would be extremely expensive. So this is an opportunity when you have a marketplace, right? You can target the investment into gender, brownfield to greenfield, equipment, access to energy. I mean, you can subdivide this in what you want at the end of the day, right?
Yeah.
So all the AI will be, a great tool, right? Once it gets populated, all that information that exists today, that thanks to Marcin and these other organizations that are working at the local level to capture this information. So tons of opportunity.
Thanks, Luke. Okay, so we've heard a bit about the deliverables of professionalization. I just wanted to take it, I know it's a bit similar, but one step further, just to sort of look at some of the impacts down the line that this professionalization, formalization will have on the financial, the social, the environmental, and economic sectors. Maybe we can start with Rob.
Absolutely. It's a great question, and it's fundamental to the asset classes, and it's fundamental to why we're here trying to do this. So to me, when you think about financial, social, environmental, and economic, there's a large variety of impacts. Some of them, and I'm not going to try to rattle them all off. Socially, well, there's gender equity, there's child labor elimination, there's the pure dignity of work, there's safety. Each of these things equate to asset classes as miners are equipped, trained, and transition to better practices. Financially, there's more productivity. And productivity might mean gold, because we know close to 20 million of the artisanal miners out there mine gold. It also might mean critical minerals, because there's copper and cobalt and things that are in short supply mined by artisanal mining. Environmental, well, it's all about nature positive. So reforestation's an example, biodiversity protection's an example. So reducing soil erosion or mercury contamination are other examples. All of these things bring tangible value to the biosphere. They bring tangible value to the communities who live around that biosphere, in that biosphere, therefore to the end-to-end value chain. And economically, if we think about artisanal mining and stable, predictable, equitable, governed business relationships, well, those words sound a whole lot like the basis for sustainable development. So it opens the door for broadening the circle of development so communities can gain, communities can grow, and the broader economy grows. So it's a whole mix of that, which is why different investors are involved, which is why a digital marketplace with a whole bunch of different asset classes makes sense, and why a Rosetta Stone, where folks need to speak the same language, is essential.
Yeah, absolutely agreed. Marcin, to fill in any points there?
Yeah, maybe a couple of things. So like, well, in our experience, miners also have their priorities. And very often the first priorities would be to go for increasing productivity, obviously making their businesses more financially profitable. But at the same time, they have requirements to comply with various laws. So the whole formalization process, which at the same time is something that all this compliance with different laws is something that the investors would be looking at and will be expecting. So the question is, it is a bit of a vicious circle sometimes. You need to invest in order to formalize and comply, but only when you comply, you will be able to actually get these investments, right? So we need to also be innovative here and look at the incentives and really see how we can drive the choices for the miners to invest in this socially and environmentally added value. And it seems like this platform and this digital environment and tokenization can actually play an important role in facilitating that, so that you can really kind of decide what kind of impacts are important to you and choose to invest in them. And that's a bit of also an experience that we've got with implementing the certification scheme like Fairmind that offers a premium for compliance, but increasingly also the market players who are paying the premium, who are paying these incentives, well, they also have their agendas and they also have their priorities, be it environmental or social. And I think this is a great way to kind of facilitate these choices to people and link the incentives with miners who want to invest in these good things.
Thanks so much, Marcin. Luke, over to you for some closing points on that.
Yeah, no, I think the question is good, but maybe the question should be the opposite. What's the cost of inaction? What's the cost of not doing anything? And we know today, right? I mean, I just turned on my computer today and you see horror stories, right? Damage to the environment, people dying, everything. It's every day. It's on a daily basis. Many accidents that are happening, and it could be prevented, right, with the right amount of financing. And quite often, people that actually choose ASM, not all of them, but some of them actually, they don't actually do it as a career choice, right? It's a poverty, trying to get out of poverty. It's something that you can do locally. You don't need a lot of trainings, right? Well, you should, but technically in ASM, you don't really need, right? You just start digging and you'll find something and somebody will buy it at the end of the day. So the cost of inaction, I think it's important for all the costs that it's generating on the environment, the social costs and economic costs. And if you look at, I'll take Peru as an example, right? They're trying to formalize 80,000 miners. I think in the past 5 years, I've managed to formalize about 2,000. And even people say this is an inflated numbers, right? But again, formalization needs to come with financing. If it doesn't come with financing, then now you need to report everything that we've been talking about. You need to increase reporting. You need to buy equipment. You need to mitigate your impact. And if it doesn't come with financing, then what's the point of formalizing, right? You can get the money quickly. Somebody will buy it at the end of the day. There's some risk, but it's there right now, right? Money exists, and somebody will buy anything from you at one point, right? And I think the last point, and That's something that we're starting to see as well. And you see mining companies, large scale mining, because we talk about ASM, but there's place where ASM and LSM, actually large scale mining, actually live together, right? I mean, actually provide licensing to community miners, provide them with capacity building, provide them with off-taking agreement. So I think this, needs, that relationship needs to be built between ASM and LSM, right? I think it exists already, but can we scale this up, right? I mean, there's no, this will prevent the many conflicts that we've seen in Panama, that we've seen in Guatemala, that we're seeing in all over the world, with communities. We're not interested, right? It's doing damage, it's to our water, or it's doing damage to the environment. But these could all be mitigated with the right amount of financing and having actors like ARMs, right? The ones that have the pulse of what's happening on the ground, and they understand what are the challenges, right? So again, for investors somewhere around the planet, I mean, this is hard to grasp. And the trust factor, again, goes back to organizations like ARM that do this and have the capacity and the trust, right? With ASM mining projects. So I think let's look at the cost of not doing anything, and it's probably worse than what should be done, right?
Yeah, thanks for turning that on its head to take a different look. I think that's really important. We're drawing to the end of our time here, but I just wanted to pass it around for 1 minute each, just to get an idea and understanding of the stakeholders that are involved in ASM formalization in and beyond the core mining industry. Maybe we can start with Marcin and then go to Rob, go to Luke and then Rob.
Thanks. So, well, I think, that the obvious ones would be the authorities that actually, are making the rules, and maybe educational institutions that sometimes are involved in supporting the miners. But I wanted to touch on the really rich panorama of different civil society organizations around the ASM, mining associations. There are the women in mining groups in most of the countries. There are also working on the regional level. Then you have the local civil society that kind of looks at the human rights issues and so on. And I think there's actually so much potential in working with these local actors so that they can have a role in promoting this professionalization and formalization, but also have a role in getting the information to feed it into whatever portfolio that you would need, and also monitoring the situation, monitoring the impacts, and kind of supporting this reporting. And obviously there is a central role and something that we would, our ambition would be also to contribute to something like that, and is to train these local actors, to provide capacity also to them, but really, create a kind of this decentralized environment where everyone can contribute and really feed into what we're planning to do, because this is the only way to bring it up to scale. There's no one single organization that can do it, and I think it's about designing incentives in such a way that it makes sense for everyone to collaborate in something like that.
SDG 17, exactly the point. Yeah. Over to you, Luke, for 1 minute, and then to Rob, and then we can close off.
All right. No, partnership. Totally agree with the words of Marcin. I think extremely important. I think what's happening right now, I mean, there's a lot of change happening this year globally, right? From a political standpoint to the need for more critical minerals, transitions and everything. So I think now we need to not look at the mining sector as one thing that exists somewhere around the world and far from where we are, not in my backyard, NIMBYs or whatever, or these other things, right? But see it as part of what we do every day, right? As I said, I was just publishing today on the impact or the minerals that are in my computers, right? More than 240 components, right, or chemicals that are found there that come from the mining sectors. Same thing from our phone, right? So we need to rebuild the context of how all of these piece comes together. It's not one or the other, or one without the other, but it's one with the other. So I think partnership, governments need to play a bigger role, right, to make sure that the financing can take place to scale, to decentralize financing. Right now, most emerging economies are facing large debt. Once again, we can't expect much from the government, but just making clear on the regulatory opportunities that this could bring, and really bridging the connection between the SM and LSM, I think will be crucial.
Thanks, Luke. Over to you, Rob, for closing comments on the stakeholders.
Luke and Marcin both said it, partnership. Miners are on the ground. They're an extension of community. Product flows to refineries. Product flows to end customers. If you're a luxury jeweler, do you want to be tarred with the brush of having child labor going to the gold that's in the $30,000 watch you sell? So there's end-to-end risks and opportunities across the entire value chain that can be brought to bear here, where everyone wins. Civil society organizations are the glue that can help do that, and investors are the accelerant that can help bring the focus, because there's both money made on one level and a whole lot of outcomes that can be shifted on another level across a wide swath of stakeholders.
Fantastic. Thank you so much, Rob. Gentlemen, thank you so much for your insights and wisdom, and we're really looking forward to pushing this forward and seeing how this digital marketplace can have a positive impact around the world. So thank you for
Michael.
your time.
Thank you very much.
Thank you.
And we will see how things go.
Thank you. Have a great day.
You.
Thanks, you too.
And open for question for those that will be watching this webinar.
Okay, great. How so? Email?
Yeah, I think we could put our emails in as part of this video, or contact numbers, and more than happy to receive questions and opportunities for collaboration.
100%. Emails, LinkedIn, however people want to reach out. We're here to engage. We want to drive a shift in outcome through this work, and we need broad-based collaboration for that, like we've kept saying.
Exactly. All right. Thank you so much, gentlemen.
Thank you. Have a great day.
Good, cheers.